planning to start your business, you are probably wondering about the best legal form. Is it a sole trader or a private limited company? So I will tell you that both legal forms have advantages and drawbacks, and the choice will always depend on your individual situation and your future business strategies. There is no one simple answer to that. There is no one size fits all. So it all has to be considered regarding your particular circumstances. What are the most important differences between the two? First of all, if you are trading as a self-employed, your company and yourself are one body in legal, accounting, and tax terms. A private limited company, on the other hand, is a legal entity separate from its directors. So you can be a company director, and your company will be a different thing to yourself. It's the same in case of sole traders. Secondly, a sole trader has unlimited responsibility for business debts. Unfortunately, many sole traders do not realize that the risk is really big. So in case something goes wrong, the liabilities may be paid from your personal assets. We will talk about this more a little bit more later on. On the other hand, in a limited company, the liability is restricted to the amount of the capital invested, so the amount of the shares held by the directors. As a sole trader, you are taxed on all your income, including PAYE income from your main job, you may have one, and your trading income, and any other income, like rental income or investment income. That means that in many cases, you will pay the income tax at the higher rate of 40%. On the other hand, a limited company can benefit from a low corporation tax rate, which is just 12.5% in Ireland. And that is why Ireland is very popular, and it's the most popular destination in Europe for setting up new limited companies. To continue, a limited company has more reporting obligations as opposed to a sole trader. And most probably you will need a professional accountant to look after the preparation of your financial statements and annual returns. The accountancy costs may be slightly higher for limited companies depending on the annual turnover and the number of monthly transactions. Also, the number of employees and directors will also have impact on the level of the accounting fees. The process of setting up a limited company is a bit longer and slightly more expensive comparing to starting as a sole trader. However, the benefits of trading as a limited company definitely compensate for a slightly higher cost and more complex setup procedure. The choice of the legal form will always depend on your individual situation, as I mentioned earlier, and many factors have to be taken into account before you make the choice. The major aspect would be the risk you are willing to take when running your business. You have to be aware, as I said earlier, that as a sole trader, your liability will be much greater comparing to a limited company, and your personal assets may be in danger. I mean your home, your car, any other possessions that you may hold. If you are not based in Ireland, you will not be able to register as a sole trader. Many people don't realize that. So we will talk a bit more about this later on. So the other trading option available to you would be a limited company. In this case, directors do not have to be based in Ireland. There are other conditions which we are going to talk about too. Trading as a limited company gives more business credibility. It may be easier for the company to obtain finance and to enter into business relationships with other traders. Limited companies are just seen as more reliable and trustworthy. They have better reputation. The decision to incorporate means set up a limited company, will also depend on your previous trading history. It would make sense to make the transition from a sole trader to a limited company once your trading income is stable and you have an established client base. This gives a greater chance of success for your new company.